Hello, I'm Mark Friedman, and today I'm going to tell you a story explaining the behavior of the accounting T accounts. Once upon a time, a school board proudly opened two new state-of-the-art high schools, one on the left side of the district and the other on the right side of the district. Then they released the combined football fight song, Left High, Right High, Fight, 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 Academics and Football with All Our Might. Well, harmony didn't last long, and the residents divided based upon the high schools. Those that supported Left High wore blue jerseys with the letter L and kept their purses or wallets on the left side. They based every decision in conformity with their belief that everything good occurred on the left side. Those that supported Right High wore red jerseys with the letter R and kept their purses or wallets on the right side. They based every decision in conformity with their belief that everything good occurred on the right side. General Construction built a beautiful three-tower development within the district at 1000 through 3000 Ledger Street, with a parking entrance at the north side of the development at 1494 Luca Pacioli Way. Solomon was working in the sales office when Grandma and Grandpa Asset, two obvious Left High supporters, came in and selected the penthouse in the 1000 building. As they were finishing the paperwork, Grandma and Grandpa Owners Equity, they are major Right High donors, entered the office with their grown children, capital, and retained earnings. They immediately began looking at the units in the buildings 2000 and 3000, which are in the right towers. Grandma and Grandpa Owners Equity purchased the penthouse in the 3000 building for themselves and the floor below it for their adult children, capital, and retained earnings. After this purchase, Solomon posted a sign in the sales office inferring that building 1000 was for those who favored Left High and buildings 2000 and 3000 for those who favored Right High. Within an hour, Grandma and Grandpa Liabilities, also major Right High donors, arrived and purchased the penthouse in building 2000. Everything was working out great. The assets favoring Left High were happy in the left building, and the liabilities and owners' equity favoring Right High were very happy in the building on the right. The oldest of retained earnings two children, Net Income, wanted to move in. Net Income had two adolescent children, Revenue and Expenses. Net Income's adolescent child, Revenue, favored Right High. A situation occurred when they realized that Expenses favored Left High. Remember, the rules required that residents of the left tower must favor Left High and that residents of the right tower must favor Right High. Solomon, a wise man, reasoned that Net Income's children, Revenue and Expenses, could be temporary residents. He suggested that 1. They go on vacation at the end of the year. 2. Assign all of their possessions to retained earnings. 3. Have the apartment painted. 4. Move back on the first day of the new year. He reasoned that they would then start off with a clean slate. The sign in the sales office was modified. It appears it now had the word permanent. Building 3000 now had owner's equity in the penthouse, capital and retained earnings on the floor below them. Right below the retained earnings was net income, and below net income on the right side was revenue, and on the left side, expense. Retained earnings' other child, dividends, lived far away, visited once or at most 4 times a year, and favored Left High. Solomon's interpretation of the rules permitted dividends to be a temporary resident by first transferring whatever possessions they had at the end of the year to retained earnings, and then closing out the apartment. Dividends would start with a clean slate on the first day of the new year and not be in conflict with the rules. Solomon noticed that some members of the Left High favoring Asset clan living on the left in building 1000 had companions living with them that seemed to favor the Right High. There were also some members of the right high favoring liabilities and owner's equity clan living on the right in buildings 2000 and 3000 that had companions staying with them that seemed to favor left high. Solomon clarified the rules. A companion, also known as a contra account, can live in the tower with the permanent resident. However, the companion must move out when the permanent resident moves out. And that explains the behavior of assets, liabilities, and owner's equity accounts.